Welcome to the Big Four Accounting Firms podcast, brought to you by big4accountingfirms.com and the Big Four Accounting Firms YouTube channel. Now, in today's podcast, we're going to talk about a couple news stories. The first one, we're going to talk about E&Y and a new program that they just announced, which is the E&Y Career Path Accelerator, which will help students jumpstart their careers by entering the accounting profession up to 1 year earlier and provides an accessible and affordable path to CPA licensure. And E&Y in their press release said it's a first of its kind program, and it's an alternative path to meeting the 150 credit hour requirement for the CPA license in the US. And the accessible and affordable program provides students with job-related learning and skills development to apply to their future careers in the accounting profession. And the program is supporting nearly 60 E&Y US interns in its inaugural program. And they say the challenge is that many undergraduate programs only give you 120 credit hours, but you still need 150 to get the CPA license. And it says it ends up leaving students to figure out how to complete the remaining requirements. Now, most people go into a MPA or master's accounting program where you get all of it at once. But some people, if your college only has an accounting degree in undergrad, then you can't get it, or you just have to get more classes. And EY says, while there are several different pathways for students to meet the requirements to be eligible for CPA licensure, time and financial resources can limit the choices or feasibility for a significant number of students, particularly those from marginalized or socioeconomically disadvantaged groups. With this program, we're not only helping students jumpstart their accounting careers earlier, but we also hope to attract the next generation of transformative leaders while equipping them with relevant, future-focused, and mentorship necessary to succeed. And so this career path accelerator will give the kids accredited business and elective courses that can be used for the CPA licensures. And the E&Y Foundation, which is E&Y's nonprofit, has provided more than $100,000 in need-based financial aid to 75% of the inaugural E&Y Career Path Accelerator cohort. And this program also provides a series of virtual courses administered by the Holt International Business School and hands-on learning through the E&Y internship program. And this gives them the courses and the experience they need to get to those 150 credit hours. So E&Y isn't trying to knock out a few things here. They're trying to get more students to become CPAs. And they cite a study that shows that CPA exam candidates decreased a number of years ago as to the reason why they're doing this, but they're also doing it for diversity purposes. And we've seen this at the other accounting firms where they've thrown a lot of money and they use the buzzwords of marginalized and socioeconomically disadvantaged backgrounds. They don't really talk about how they identify that or how they're going to actually solve that problem, or actually any metrics either. It's just they're going to help more students get to their 150 credit hours. And I think that's important because I think in this day and age, it's hard to get people interested in accounting, and then also all the way through to their masters, to the CPA, because all that takes time. Like this article, like this press release says, it's 150 credit hours. It's hard to get people to take that many credits. But if E&Y stays true to this and they get people these credits while they're working and getting their experience, then I mean, it just makes it that much easier. It makes it that much more affordable. For me, I feel like going to school for an extra year or two to get those credits is not really worth it. It's better to just, if it is possible to do it virtually, I think it is more valuable to do it that way. And anyway, the Big Four accounting firms can make it a lot easier, the better it's going to be for them, the better candidates they'll get, whether it's diverse candidates or, whatever. The less money you make people spend and the more money they can make in the long term, I think the more qualified candidates you're going to get. And I'm sure that's something the Big Four accounting firms are struggling with, is getting really high quality candidates into accounting and tax fields in their companies. So we've seen Deloitte throwing millions at foundations from their foundation to students to get them through accounting. We've seen EY build this accelerator program. So they're obviously right now very interested in hiring more people, and they can't find enough candidates. So before we move on to the next story, I wanted to talk about our sponsor. And today's podcast is brought to you by tryvoomer.com. Voomer helps you ace the interview at the Big Four accounting firms. And it does this by giving you AI powered feedback on your interview to improve quickly. And if you use the link tryvoomer.com/big4 BIG and the number 4, and I'll include the link to that in the show notes. Or if you use the promo code big4 BIG and the number 4, you will get 10% off your purchase of their software, which again will help you with your Big Four video interview, which many of the Big Four accounting firms use: Deloitte, PwC, and EY. And Deloitte definitely uses this software on scale, so you might want to check that out. But speaking of Deloitte, Deloitte has just announced, and it's all over the internet today, that they're going to be teaching their 330,000 global employees in climate literacy, whatever that means. And so what they're going to do is they're going to address climate change. And even their global CEO, Puneet Ranjan, spoke about this. And the reason they're doing this is because ESG is becoming a big thing. It's multiple global entities, the UN, the World Economic Forum, all these large organizations are pushing it out to corporations. Corporations are adopting it. Investment firms are adopting it, like BlackRock. And so it's getting pushed out. It's getting pushed out by the largest companies in the world. And I think that's why the Big Four accounting firms are getting involved. And because I think it's a way for larger companies to get market share, because it's the way they're going to teach it is they're teaching you ESG and the ESG standards, or that's what they're going to be doing. And it's going to be another regulation in multiple countries. And those regulations, you're going to have to fill out forms, you're going to have to provide information. And so it's, while Deloitte in their press release tries to talk about the climate crisis and how urgent it is, they're not sitting there. Deloitte's not going to be sitting there telling their employees, like, this is the worst time for a climate crisis. It's urgent. You need to do X, Y, and Z. They're going to be telling you, okay, here's X, Y, and G. Here's the next steps to come, and they're going to say their clients are coming to them, but the clients aren't really coming to them. It's being pushed from NGOs downward, because if it was just a climate crisis, then Deloitte wouldn't have things to teach. But they're going to have SDGs, Sustainable Development Goals from the UN, and from multiple NGOs. They're going to, along with the Big Four accounting firms, they're going to establish this ESG standards, these regulations that will just be something else that big companies have to deal with, and the Big Four accounting firms will help them with that. But it's going to be a lot more pressure on smaller companies. So that's why Deloitte's doing this. And I think people, to a lot of people, they don't keep up with it. They might recycle or buy an electric car, but they don't realize all the nuances that are going to come out of this supposed climate crisis, all the regulatory, all the forms. You have to think of a tax form, and we're going to start having forms for climate metrics. You're going to have to keep track of, for companies, how many miles the company cars drive, what's your carbon output, what's an offset. There's going to be so many things that come out of this that are just going to. So I think right now what Deloitte's doing is they're going to do a primer. Do a primer, get people primed up, and they want to start pushing ESG to the clients. And then from there, once you get these people on this primer, then once the deep regulations come out, once all this compliance starts to come out globally, then they'll be ready, and the employees will be ready to consult their clients. And I think who knows, depending on how this goes, this has a potential to be a completely other practice in the Big Four accounting firms. And I mean, I'm sure it is. We see in press releases every day about a new partner in an ESG practice, but right now that would probably just be under consulting. So, I mean, and I'm sure the ESG stuff will be under consulting. You'll have specialists in tax and audit at some point. I'm sure in audit there's already people in there, but if this thing, if it becomes what I think it might, where it's just huge regulatory compliance, and for large companies and then a burden on smaller companies as well, then I think there's going to be a lot of forms to be filled out, and the big four accounting firms have a lot of money to make. And I think the big four accounting firms are at the center of this ESG. There's the center of the push. There's a lot of talk in the investment world about this as well, about ESG and ESG funds. But I think the big four accounting firms on the consulting and professional services side are there to push it to the big companies and to push the urgency. The big four cannot force companies to do anything, but they can take it to their clients and tell them the urgency of releasing the information. And some places around the world, they already require them to release information in their financials and releases, and that's only going to increase. So I think that's why Deloitte's doing it. They're trying to get ahead of it. They're trying to put a primer training out there, and then the more detailed training as it comes out, their staff will already be prepared for it. And I think the other big four accounting firms will also be doing this soon, because they all follow each other. So that's just something very interesting. And this was a concerted push by Deloitte to get this information out there, because it's all over the internet today in multiple places. So they want people to know that they're pushing this climate change at the forefront. And the reason they would do that is because they want to signal to their clients that they're at the head of ESG. And then if a CFO has to deal with it, or anybody, or a CEO, then they're going to reach out to Deloitte for RFP on ESG services. And right now, the ESG services might be small, but they're going to grow over time. So Deloitte is trying to establish their brand in this area. But that's the podcast for today. Make sure to subscribe to this podcast to get future updates. Make sure to check out the show notes for the affiliate links to Voomer, and also to other ways that you can support us. Thanks for listening.